Yeah, good evening. It's Jim from JAGfx.com and it is Thursday the 6th of July 2017. It's been a while since I've done a video, so I thought I'd better do a couple. I get a fair few subscribers to my YouTube channel. I'm just going to change the format a bit. Instead of just going through all my daily charts and showing the trades I'm in, I thought I might do a bit of sort of education type stuff. Where we just go over some historical charts and I'll just share a few ideas with you, the sort of things I look at and the sort of setups I prefer, etc. I thought it might be a bit more interesting. So I haven't really prepared much, so I'm going to wing it a bit. So in front of us we've got a Euro Japan or Euro Yen daily chart. Now this is a fairly good chart. I don't think I actually trade this pair, I probably should. It has some nice moves. So I haven't, as I said, I haven't really gone back and had a look, but what I'll do is I'll just scroll back a bit and we'll just take it from there. And we'll just, what I'm going to do, and this is what I sort of harp on a bit in my books and stuff like that, that nothing beats time on the charts, just going over them. Now I've got email alerts popping up. So let's say we'll start here. There's a couple of nice trends here. So this is the daily chart, all right? So, and you've got to remember too, I know it's hindsight, I appreciate that, and you know, it's a lot different to trading off the right edge of the chart live, but you've got to remember that we've got certain rules in place. So we all know that you only take sort of buy trades when the MACD platinum's below the zero level, and we only take sell trades when it's above. We've got the moving averages to give us an idea of direction. We've got the green and red QMP filter dots, and none of these repaint, so these dots won't form mid candle. So it might, you know, be 2 hours into the day, you might see like up here you might see a red dot forming. That red dot doesn't appear until the signal's been confirmed. So that red dot, once it's there, it's always there, so they don't repaint. That's a big problem with a lot of indicators, but these ones don't. So when I look back over a historical chart, I can basically tell you what I would have done, because the rules are rules, and you know, so there's no sort of getting around it. So we'll just look here, right? And it's probably just picking a few trades at random setups I'd like. Now I'll put my crosshairs on. Now you can see here the MACD platinum's come above the zero level, so basically I'll be looking for sell trades. The MAs are flat here, and say, so we've got a red dot in the MACD platinum here, you can see it clearly, and we get price goes up, the MACD sort of flattens out. You can see how it flattens out there. It's pretty like a tabletop, I guess you could say, and we don't get it, we get a red dot up here. Now there's probably not enough there to say take the sell, because you know, look, the MAs are starting to spread to the upside. There's no divergence there between price and the MACD. But say you did take the sell, all right, just for whatever reason, because the daily chart you can just about take every signal when it's like this, and you put your stop just above the recent high there. That's if you chose to do it that way. You know, I'm not saying that's the right way or anything, but that's what most people do. And this is quite common. See how price has continued up and just taken out that high with another new high there. So that would have taken your stop out. No big deal, but you see here we've got a high, and basically that red dot is pretty well close to the high of the MACD platinum. Now this new high, look where that is when I put the crosshairs on compared to the MACD platinum. It's all the way down there, here, down there, this blue dot here, or this between the blue and the red dot. So here you've got divergence. I'll just move the chart across a bit. I'll just draw a couple of trend lines here. So between there and there, you've got high on price, and that goes from about there to there. So you can see that's about to start there somewhere, and there. So you've got divergence, price is going up, MACD is going down. Now all I do is I have my my little cheat sheet here. If you want to just do that, this is what I do. I just have my full diagrams here. So I just look for the one in the chart. I know what it is, I don't have to really look. So it's regular bearish divergence, and I can read about it here. I can just confirm, yes, there we go. We've got high on price and a lower high on the MACD platinum. So that's confirmed, that's regular bearish divergence. So to enter that now, because we've already had the red dot. You've probably been stopped out on the QMP. You're not going to get another dot. So it's just a matter of drawing some sort of trend line along the lows here. It doesn't have to be precise, just anywhere in there where you think's a fair thing. I tend to draw my trend lines. I sometimes start, say, a candle base, bottom of a candle, then I'll draw through, say, the body of the candles or something like that. So it doesn't matter where you get in, anywhere in this area here, break of the trend line, still got a valid sell signal, got divergence there, anywhere in here, and you can put your stop above that new high. Like I said, this is quite common. You'll enter a trade, you'll get stopped out by a few pips, then price will go in the original direction. Happens a lot. So obviously you can see, in hindsight, I know it's a great trade. Here's another example. Now, for whatever reason, say you took the buy here on this green dot, you can see the MACD's below the zero level. You keep a really tight stop if you wished in here, and take that. The MAs are starting to turn down. It's up to you whether you took it or not. I'm just using this as an example. I'm not saying it's an ideal buy setup. You took it, you get stopped out. Look what happens again. Price drops down, takes your stop out. No big deal, don't panic. So here we go, price is heading down. And we look at the MACD, price is heading up. Once again, I'll just move this across so I can bring up my little pictures. Once again, we've got regular bullish divergence. See the diagram. Price is heading up on the MACD, price is heading down on price. Again, draw a trend line. Could be anywhere, it doesn't have to be precise. Say across there. You get in here somewhere, in here. It's just about a mirror image up there. It doesn't go very far. And remember, as soon as price breaks through the MACD platinum, as soon as it breaks through the zero level, we're looking at either moving our stop up to break even or closing part of the trade, or we're taking some sort of action, because once it gets on the other side, we're starting to look for sells now. Now, here we go, we got an early warning signal, you've got a red dot in the MACD platinum in this sort of area up here. So, yeah, you would have only got a few pips on this trade, but that's all right. So you know you're looking for sells now, and as the MACD rolls over, there's the QMP. Now I probably wouldn't have taken this particular trade because I like to see price go up into the MAs, as I keep on saying. But there's a good sell. Take the sell there. Have your stop above the highs, take it down. Nice. As soon as we go through that zero level on the MACD platinum, we're looking at getting out of the trade or taking some action, moving stop, getting a break even, taking partial close, or whatever your trade management thing is. We get down the low here. Now here we go. Now have a look at this. Here's your new low. Here's a new low. Blue dot, green dot. Should make them the same colour, shouldn't I? But it doesn't matter. So, and what have we got here? There's a low from over there. There's a low there. So we've got lower lows on the price, and you look at MACD. Got divergence again. It's everywhere. Let's look at our pictures. Again, regular bullish divergence. There it is on the pictures. Just a cheat sheet I use just to confirm. I generally know the regular ones, but sometimes I have to look at the cheat sheet for the hidden divergence, which can be a little bit tricky at times. But anyway, so we take the buy. As soon as MACD goes through the zero level, start taking evasive action. It's on this candle here. You might not have got much, probably got a few pips there. That little bit there is actually 275 pips, so it's nothing to be sneezed at. Make a few pips, get out. It doesn't matter. Looking for sells now. We're above the zero level. There's a red dot. Nothing. No QMP. Here's your QMP filter confirming dot after a second MACD. It's not a great trade. Again, it hasn't got into the MAs, but it's a valid sell signal, and you could have got a few pips out of it. As soon as the price got down here, down near the zero level, start to stall in there, you'd probably get out. It probably wouldn't be a great result there. But then, what have we got again? We've got another buy signal. We're against the MAs, so don't worry about the MAs too much. I'll cover them more in another video when I talk. I'll probably do another video of this showing the 1 hour charts, but I'm just showing signals at the moment, how to look for stuff. So here we are, look at this, here's a low here, and we've got a lower low on price, and again we've got same again, exactly the same divergence. Have a look at the picture. Regular bullish divergence. Price is lower lows on price here and here, and the MACD's going up. So the only problem I'd have for this is you have to be careful because price is already at the zero level. But like I say in the book, as long as one of your MACD points, MACD platinum points, start on the correct side of zero, it doesn't have to be the beginning or the end, as long as one of them is on the right side of zero, and this one is, so that's a valid buy signal there. Take the buy there. Here you're going to have to be a bit more think about your money management because you've got no MACD zero level to sort of assist you. But look at that, price goes up. I probably would have, as soon as I hit that MA, I'd probably close a bit, stop to break even, and it just goes up. Look at that, 240 LMA bounces off. So once again, we're up here. We've got a red dot. We're probably with the MAs. I'd be tempted to take that. This would be a loser, I'd say. Say you had your stop just above the highs, you get stopped out here. Again, that's that usual. If you got in, say, here and stopped out up here, so you probably lost a couple hundred pips. So that's gone about 280 up against you. Depends where you had your stop. That all comes down to that. But again, you can draw your, you got stopped out, so just draw a trend line anywhere. Just pick a sort of area that's across the bottom of the candles. In here, entry point again. It didn't go far. You get to the zero level on the MACD platinum. You might be tempted to either get out there or break even, just make up for your previous loss, something along those lines. But again, we've got a new blue dot below the zero level, so it tells me there's a buy. It's not a really convincing one because it's just below the zero level. I can see it's gone up nicely, obviously, and we get the green dot on the QMP, so it's a buy signal. Let's have a look, see if there's any divergence, and I can see divergence. I'll just move this trend line so it doesn't clutter up. From that low there to that low there. So we've got price going higher. Let's have a look what we've got in the MACD. Price going lower. So there's divergence between price and MACD again. It happens everywhere. So what's this one? Let's have a look through the cheat sheet. And there it is. Here we have a hidden bullish divergence. So you can see it here. MACD going down, price going up. Simple as that. Confidently take that buy signal, keep your stop down here, and look at that. As soon as it goes through the zero level on the MACD platinum, nice trade up, nice trade up. And here we have, what do we got? You can see it, can't you? Red dots all around, telling me a sell. We're above the zero level. It's up to you whether you take it or not, depending on the MAs, because they're getting flat and tight now. But let's have a look. What's here? Look at that, price going up, high highs. And what have we got here? Divergence. It's ridiculous. I just scrolled back in a chart here. I didn't even cherry pick this at all. I just went to a place. Honestly, I did not plan this. It's getting up to about 13 minutes. So there's divergence again. Go to the cheat sheets if you want and have a look. Nope, just got stopped out of something by the sounds. That's my phone alert. So where we go, regular bearish divergence. Price, higher highs. MACD platinum, lower low, a high followed by a lower high. Take the sell signal. The stop above the highs would have held just. There you go, down we go. Buy signal in here. Is a divergence? I would say, I'd say there is, and I would call it, like these on the daily charts especially. Straighten up my line a bit and see how close it is. Double bottom here, there and there, and that would be there and there, and that again is divergence, even with a double bottom. Let's have a look, and that's not it. That would be it. So we've got lower low on the MACD platinum and high high or double bottom. It's hidden bullish divergence, that's going up. Not a very good trade. MAs are super flat, and here we go, it goes up. You can do this all day, and this is what I tell everyone. Get on the charts, especially the daily charts. They're excellent for this. You can just about take every valid signal on the daily chart. Look, you're going to have losses. That's part of the trading game. Look for re-entries. Sometimes the signal remains valid. Remember what I said. You get stopped out sometimes. See, here's a good example. Say you took this sell here and you had your stop on this high here. You know, if you took that sell and just had your stop above the high there, look, you just get stopped out there by a few pips. The thing is, the banks, the institutions, the market makers, they all know where your stop is. If someone takes a sell there, they've got a fair good idea that their stop's going to be there. So either widen your stop up a bit, or take the loss and look for the re-entry. Look, just draw your lines across there. Your trend line across there. You've got stopped out up here, so price comes down, get in here and get back in it. Still a valid signal. Alright guys, that's 16 minutes. I'll do this video up. As I said, just get on those historical charts. Get on the historical charts. Just look at them. Go over them. I know it's hindsight. The signals, the indicators don't repaint. You know the rules. Just have a look. It's simple. It is really simple. Try not to make it too complicated. Anyway, thanks for your time, guys. And to all those new members of the JAGfx group on Facebook, it is appreciated. We're getting up near 1,000 members now. It's great. Thank you very much. Always enjoy the interaction, as you know, and I get a lot of emails too, and I don't mind that either. So I like to help people out, and I'll do another video very shortly, and that will be on a smaller time frame, like the hour or something like that. All right guys, thanks very much. Cheers.